In the financial markets, you keep hearing about line charts or bar charts to depict a price movement of a security. In stock market, analysts talk about candles. What are they, why they're so important, and how to use them. Hi, this is Abhinav Kaul from economictimes.com, and in this video, we'll talk about candles, their use in analyzing a stock, and how to use candlestick charts. History has it, candles originated before line charts or bar charts. The Japanese are known the first to use the candles when they traded rice. We have with us Milan Vaishnav, consultant technical analyst at Gemstone Equity Research Advisory and Services, to take us through this unique world of candles. So Milan, let me start with the very basic. What is a candle and how does it differ from a line or a bar chart?
Candles, as we all know, it is one of the most widely used form of the chart, and it dates back to almost more than 250 years, and it came into existence even before the traditional line and the bar charts came into being. So if we try and see the difference between the candle and the bar chart, we can put it in a way that the bar chart or a line chart will show you the price, whereas the candle will also show you the force that is associated with the move in the price. So it will incorporate all the four data points, that is open, high, low and the close, whereas the bar will either take care of only the high and the low, and the line will only take care of the close point. So it will give you a sort of double information as compared to the price and the bar chart, by showing you the force that is associated and the direction of the force in that particular candle.
Now that we have understood what is a candle, Milan, help us identify different patterns. Also tell us what are the common mistakes one makes while using them.
There are many mistakes that one makes while analyzing the candles. The biggest mistakes that I have seen people making is that they are too much in haste to name and spot a particular candle and try to make a trade on it. If we look at the basic structure of the candles, it may appear to be, say for example, an engulfing bearish pattern or a bullish pattern, but to actually be a valid bullish or a bearish candle, a prior trend should be examined which is associated with that. For example, if a bullish engulfing pattern is appearing on the chart after some significant down move, then yes, it's a valid candle and it can potentially mark a bullish reversal. But if that same candle is appearing after an up move in the price, then it would not be proper to call it a bullish engulfing pattern, and it can on the contrary mark a top for the price. So one of the most rudimentary mistakes that one makes while analyzing candles is that not looking at the prior trend that has occurred before the emergence of that candle.
Now let's examine these mistakes in details. The first is ignoring short-term trends. We are keen to identify in a hurry to label different formations. These formations are bearish engulfing, bullish hammer, hanging man, morning star and evening star. Here are some pointers to identify different formations. For bullish engulfing pattern to remain valid, it must emerge after a downtrend to mark a bullish reversal. It will not be valid if it occurs during an uptrend. For morning star, it must emerge after a downtrend to mark a bullish reversal. It will not be valid if it occurs during an uptrend. In case of bearish engulfing pattern, it must emerge after an uptrend to mark a bearish reversal, and it will not be valid if it occurs during a downtrend. For bullish hammer, the pattern must emerge after a downtrend near supports to mark a bullish reversal, and it will not be valid if it occurs during an uptrend. In case of evening star, it must emerge after an uptrend to mark a bearish reversal and will not be valid if it occurs during a downtrend. Now that we know trends, here's Milan with the second most common mistake people do while identifying different candles.
The second most common mistake that I have seen people making while interpreting the candles is that, again, using it in isolation without confirming the price action with the other piece of indicators which are available. For example, a bullish engulfing pattern may occur. For example, a morning star may occur. Now, even if they are occurring after a downtrend, which is basic requisite before we actually name that candle that way, we also need to confirm that if the leading indicators of the charts are showing in overbought condition, then we might get an up move, but it would be less forceful in nature. So reading the candles along with the other piece of indicators is also equally important. Candles also should not be read singularly.
So there you have it, the wonder world of candles. To know more about such technical terms, keep watching this space.